Welcome to Business Studies for JSS 3. Today we study budgeting and budgetary control. What is a budget? A budget is a financial plan that estimates expected income and expenditure over a future period, usually a month, quarter, or year. A budget guides how money is spent and helps individuals, businesses, and governments achieve their financial goals. What is budgeting? Budgeting is the process of creating a budget, planning income and expenses in advance. What is budgetary control? Budgetary control is the process of comparing actual results with the budget and taking action to correct any differences, called variances. Importance of budgeting. 1. Planning. A budget forces you to plan how money will be spent before spending it. 2. Control. Helps you control spending, prevents overspending. 3. Coordination. In a business, a budget coordinates the activities of different departments. 4. Motivation. Budget targets motivate managers and employees. 5. Evaluation. A budget allows comparison of actual performance against plans. Types of budgets. 1. Sales budget, estimates expected sales revenue. 2. Production budget, estimates number of units to be produced. 3. Purchases budget, estimates materials to be bought. 4. Cash budget, cash flow forecast estimates cash receipts and cash payments, ensures the business has enough cash. 5. Capital budget, plans for major investments, new machinery, buildings. 6. Master budget, the overall budget, combines all other budgets. The budgetary control process. 1. Set the budget, estimate income and expenses. 2. Record actual figures, record what actually happens. 3. Calculate variance, variance equals actual, budget. 4. Analyze variance, is it favorable, better than budget, or adverse, worse than budget. 5. Take corrective action, if spending is too high, cut cost. If sales are too low, investigate why. A simple personal budget example. Budget for a month, expected income, 50,000 Nigerian nairas. Planned expenses, rent equals 20,000 Nigerian nairas. Food equals 10,000 Nigerian nairas. Transport equals 5,000 Nigerian nairas. Airtime/data equals 3,000 Nigerian nairas. Savings equals 5,000 Nigerian nairas. Other equals 7,000 Nigerian nairas. Total planned expenses equals 50,000 Nigerian nairas. If actual food spending equals 14,000 Nigerian nairas instead of 10,000 Nigerian nairas, adverse variance of 4,000 Nigerian nairas, overspent by 4,000 Nigerian nairas. Nigerian government budgeting. The federal budget of Nigeria is the government's financial plan for the year, presented annually to the National Assembly by the President as the appropriation bill. It covers capital expenditure, roads, hospitals, schools, and recurrent expenditure, salaries, pensions, debt servicing. Remember, budget equals financial plan that estimates expected income plus expenditure over a future period equals usually a month plus quarter or year, guides how money is spent plus helps achieve financial goals. Budgeting equals process of creating a budget equals planning income plus expenses in advance. Budgetary control equals process of comparing actual results with the budget plus taking action to correct any differences equals variances. Importance. Planning equals forces you to plan how money will be spent before spending it. Control equals helps control spending equals prevents overspending. Coordination equals coordinates activities of different departments. Motivation equals budget targets motivate managers plus employees. Evaluation equals comparison of actual performance against plans. Types of budgets. Sales budget equals estimates expected sales revenue. Production budget equals estimates units to be produced. Purchases budget equals estimates materials to be bought. Cash budget/cash flow forecast equals estimates cash receipts plus cash payments equals ensures business has enough cash. Capital budget equals plans for major investments equals new machinery plus buildings. Master budget equals overall budget equals combines all other budgets. Budgetary control process. Set the budget, record actual figures, calculate variance equals actual budget, analyze variance equals favorable equals better than budget or adverse equals worse than budget, take corrective action equals if spending too high cut cost plus if sales too low investigate why. Simple personal budget example, expected income 50,000 Nigerian nairas, planned expenses equals rent Nigerian naira 20,000 plus food Nigerian naira 10,000 plus transport Nigerian naira 5,000 plus airtime / data Nigerian naira 3,000 plus savings Nigerian naira 5,000 plus other Nigerian naira 7,000 equals total planned expenses 50,000 Nigerian nairas. If actual food spending equals Nigerian naira 14,000 instead of Nigerian naira 10,000 equals adverse variance of Nigerian naira 4,000 equals overspend by 4,000 Nigerian nairas. Nigerian government budgeting, federal budget equals government's financial plan for the year, presented annually to National Assembly by President as appropriation bill. Covers capital expenditure equals roads plus hospitals plus schools plus recurrent expenditure equals salaries plus pensions plus debt servicing. Thank you.